This is not financial advice. I'm not qualified to give financial advice. My previous job was in building. Much unhappiness has come into the world because of bewilderment and things left unsaid.
I think the second one would be more clear regulation. That would help a lot. I do talk to, pension funds and, various asset managers, sovereign wealth funds and stuff. And a lot of them tell me we've got 1% of our portfolio in crypto today, but we really would rather have like 20% in there. But what we're waiting for is more clear regulation, coming out and saying that clear test that I was saying. These assets are commodities regulated by CFTC, these are by SEC, these are by Treasury, whatever. So that would be a big unlock.
A sovereign wealth fund is a whole country. Brian Armstrong just said whole countries are willing to go from 1% of their portfolio up to 20% as soon as the U.S. gives clear guidelines on what's a commodity, what's a security, and what's a currency. A pension fund is an investment that pools everyone's retirements together like unions or government employees. Going into crypto, going from 1% to 20%. Please take a moment to think about what that means. After the big guys get in, where will utility take us?
And in the early days, we found very few adopters as it relates to using digital assets and crypto to do that. And we went out and built a fiat-based network. So we're actually in nearly 60 countries. So we approach this as a global business. We run a lot of it out of Singapore, but it is a global business. And our observation will be, despite these macro headwinds, which are real and we should talk more about, this has been a breakout year for our business and our core product, which is on-demand liquidity. The uptake on clients, whether or not they're fast-moving PSPs or fintechs or slower-moving older line financial institutions, has been terrific this year, as we've gone from just a few corridors and countries where ODL, or the ability to use digital assets to settle across the blockchain between two countries in a remittance basis or other use cases, has gone to now 25 plus. And so that's extraordinary in the last year. So we're finally feeling it despite all that's going on from a macro standpoint.
Nice one.
Fast-moving fintechs, PSPs, or older, slower financial institutions this year. All official announcements of ODL have been fintechs. Brooks slips and says there's an older financial institution. I wonder what older financial institution is using ODL. He also states there's 25 plus jurisdictions that are using ODL. Anytime a bank touches crypto, it needs to get approved by the nation and the central bank. So 25 countries are allowing crypto settlement to take place.
Absolutely, and it's a great tie-in from the last question to Rox. And by the way, the playbook that you have for getting an MAS license is extremely valuable.
Thank you.
And as a partner of Independent Reserve, we're extremely grateful for all you've done in that front.
Brooks slips and says Ripple is partnered with Independent Reserve. Independent Reserve is an Australian crypto exchange that has won the Digital Currency Exchange of the Year in 2019 to 2021 by Blockchain Australia, as well as Deloitte's Tech Fast 50 Australia. On October 1st, the Central Bank of Singapore, or the MAS, granted them a license to provide digital payment token services. Independent Reserve alongside DBS, the mega international bank, were the only two to get the license.
We too at Ripple are in line for a license here as well. We have built around this jurisdiction with the belief that this is one of the great places to be regulated and to build a business, double the size of our office here. We run global businesses out of Singapore. And in a similar life as well, previously, when I first got to Singapore 11 years ago, I served on the Capital Markets Committee with a previous employer at the MAS when Robbie had just taken the seat. And I really grew during those 2 years to have enormous respect for the process and the rigor the MAS puts around these licensing processes. So
Ripple is in line to get their license as well. Brooks used to work for the MAS. Ripple runs a global business out of Singapore, and it's 2x'd in size.
So my sense is between registry, trade finance, and cross-border payment are the space which many countries are going to focus on and find a way to solve it.
Clifford Chance is an international law firm headquartered in the UK. They released this PDF on the UK Financial Services and Market Bill, and there's a section called Digital Settlement Assets. The bill would give the HM Treasury, which is the UK's Treasury, power to establish an FCA authorization, which the FCA is the UK's regulatory committee, and supervision regime for digital settlement assets, broadly crypto assets used for the settlement of payment obligations. So we know that Bank of England has partnered with Ripple, and now there's law that's coming about to regulate digital assets for settlement, and that's XRP's use case.
This FI journey has really followed that in some ways. We first built Ripple Nets. We had a fiat-based product with the hope for putting crypto on these rails, and we went to some of the world's big banks, many of whom became investors in Ripple early on. But at that time, back this clock up now, 2015, 2016, if you could get yourself into the boardroom, it may have been a quick discussion and you were on your way out because the notion of hearing about crypto was just too early, which is why we really pivoted at the time to go after some super innovative fintechs around the world and PSPs who really helped drive the adoption of our product, many of them based in this market, many of them showing today at this conference today. What we've found in this last year is the FIs have come full circle. My old employer, Goldman Sachs, had a crypto desk in 2017. They shut it down. It's back open and very much in a big business for them. And so you can kind of draw that across most major FIs, and that internal discussion has changed dramatically. And our goal as an enterprise solutions provider is to be in front of them, just like we are with regulators, to walk along with them in that journey and see if we can provide opportunities and product for them.
Back to what Brian Armstrong said. He said there is a tidal wave of wealth headed towards crypto post-regulations, and that is only in the investment side. Brooks is saying they have a whole software suite for banks to use when the time comes. The same banks that Ripple has a rapport with, and in some case have even invested in Ripple.
I think what people are asking that this blockchain is powered by digital currencies. For me to write an application on Ethereum, I need to pay in Ether. So there is a natural demand for this cryptocurrencies if the world is going to write a lot of applications on this network. So the question here is, I guess, whether the digital currency. What do you expect to see hit the market? Yeah, so I think a lot of these digital currencies which are going to power the network on which these applications are going to be built will see some market appreciation. But I don't know which one will succeed because in the world of digital currency, there is this native currencies which the networks are using to power application. And there is this tokens which represents projects and there's an underlying economic value. I think somewhere down the line, there has to be some clarity around how to connect the tokens or currency to what value it drives. Ultimately, I think there will be a path forward.
In the Ripple quarterly report, there is a section on Fluff World. Fluff World is a pretty big NFT project. It states that Fluff World is going to create the root network, and the root network and the XRP ledger will be closely linked. But XRP will be the gas token on the root network. What's interesting about this is usually a federated sidechain is just going to be a different network completely, meaning they'll have their own token. But the way this is saying is that XRP is going to be the gas token on the root network. So this is an EVM blockchain, and XRP is going to be used as the gas on this network. Now, maybe they left out some information, but the way this sounds is the native digital asset XRP is going to be able to go into a different network and be used as a gas token, which is pretty cool. Back to what Mr. Mahatni said from the Monetary Authority of Singapore. The economic value of crypto comes from the demand of the token. The root network is an Ethereum virtual machine, so it has the same exact capabilities of ETH, and all projects on ETH can move over to the root network with ease. And instead of you paying ETH to use the dApp, you pay with XRP to use the dApp. So you might say, Darren, this is just an NFT project. Just the capability of doing something like this is a very big deal, meaning anyone can create any networks with whatever rules that they want, and the cost is paid for in XRP. But also, Fluff is a pretty big NFT project. To move NFTs, to create wallets, to sell an NFT, it will all be paid for with XRP, creating more demand for the token, therefore more value.
Models by which they can achieve scalability in the blockchain layers. They're building layer 2 construct. They're moving processes out of the main blockchain, pushing to the side chains. They're working on something called shredding, where the database are getting far more efficient. So what we underappreciate, the amount of effort technologists are pushing behind this blockchain network to make it work. There will be a case for public blockchain. There'll be a case for permission blockchain, which to me is nothing more than a distributed ledger technology. And they'll have its own space. And we should appreciate people's effort going into a different direction rather than create a narrative that all should go to public chain or all should go to a permission chain.
The future is going to have an array of public, private, permissioned, and permissionless chains.
I think what comes out strongly in the public space is every central bank's making an effort to solve this cross-border payment issue. And people talk about MCBDC, multi-CBDC, and CBDC. Why that's a big deal? And I'll give an example. Without blockchain, without Web 3.0, Singapore connected to Thailand 2 years back. Our PayNow got connected to PromptPay in Thailand. The cross-border payment, which used to cost for every $100, people used to pay somewhere between $8 to $15 for a money to be sent from Singapore to Thailand. That got now reduced to $3. We're now connecting to India. We're now connecting to Malaysia. The question you're asking, can that $3 become less than $1? Which means we have to solve for the settlement and the reconciliation and the atomic way to recognize different KYC sanction checks done on the cross-border payment cycle. And to do that, you need a distributed, a smart contract way to design that. And you perhaps need a CBDC construct to solve that process. So those areas are exciting for a lot of people. It solves a real problem. If you can bring down the cost from $3 to less than $1, you're talking of billions of dollars being saved globally, especially for remittance. So that's one area I think many countries are working on. I think that's something to watch out for.
SWIFT could face challenges in a new era for cross-border payments, and this is a Finextra article, and it talks about the decline in correspondent banking and how much costs are going up. So Mr. Mahatni from MAS was talking about these real-time payments platforms being linked up, and they're able to reduce the cost from $15 down to $3. But these real-time payment platforms, they're just messages. On the back end, the correspondents still need to settle with each other, right? So these are just bilateral relationships between central banks, and the correspondents still need to move the money on the back end. And that's where a lot of the cost comes from. And down here is a link for a PDF that goes into more depth. And here's a chart of the correspondents that are in decline, while payments are increasing over time. So there's more cross-border payments being sent, but the banks on the back ends, the ones that actually move the money, are declining, and that comes from a variety of reasons. The correspondents are charged a lot by governments if they fail to do KYC or AML. So in these smaller jurisdictions, there's more risks involved because they don't have a bank in that area. They work with a Vostro or a Nostro, and they have a relationship with some other bank that does the payments for them, and they just kind of back them, right? And they back them with the other currencies. Now, when these banks get in trouble, everybody gets fined, and they have reputational risks as well as just the liquidity costs. If you're in a jurisdiction that doesn't have high liquidity, then guess what? The spreads are going to be much more. It's going to be more time to settle. It's just going to cost more. And there's the chart that I was showing with the real-time payments. Now, it also gets into a new era for digital payments, and you can see Ripple and Stellar here for the crypto rails.
There are certainly big countries with massive central banks that are going to do this on their own. We're having a reasonable amount of success with smaller countries and their central banks that need solutions and ideas and technical assistance. We've announced deals with Bhutan, with Palau, and are in conversation with many, many more.
The larger countries have budgets to create their own central bank digital currencies, but these smaller countries have to partner with companies like Ripple to create a CBDC. Now, when you have all these smaller countries in a network together, that makes the network that much stronger. The real-time payments platforms charge around $3, but with crypto assets and CBDC technology, this money can move instantaneously for fractions of a penny.
Well, I think the digital asset executive order is a really important inflection point for the digital asset space. The future of money, from my perspective, is going to be a basket of currencies, where you're going to see the three buckets of digital assets: decentralized finance, including Bitcoin, Ethereum, Avalanche, and other blockchains, living alongside the Paxos, Circle stablecoins, and then central bank digital currencies. Right now, you have 103 central banks, around 95% GDP, all in pilot stages for a central bank digital currency. I see those three buckets of digital assets all living alongside each other, and I see that ushering in the next iteration of a digital Bretton Woods going forward, because the future of money is that the consumer wants options, and that's where the basket of currencies comes into play.
Former senior U.S. Treasury Michael Greenwald is saying that a Bretton Woods is coming, and crypto assets are entangled into this new financial system. Don't let us forget that the causes of human action are usually immeasurable, more complex and varied than our subsequent explanations for them. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon.